EKI Energy Services came up with an initial public offering in March 2021. Its shares were offered at Rs 102 apiece. Today, they are trading at Rs 10,200 apiece on the Bombay Stock Exchange. In this video, we take a look at what exactly the company does and the reason behind its meteoric price increase. Indore-based EKI Energy Services are one of the emerging companies in India in the domain of the carbon credit market. But first, let us understand what the carbon credit market is. Carbon credits are the tradable certificate or permit to the emission of carbon dioxide and other greenhouse gases in the atmosphere. The carbon credit market is immensely growing, now being recorded at $6.7 billion. Carbon credits have been in demand for quite some time, and this has led to an upsurge in the price of these credits, as these carbon credits are limited and are to be assigned to a certain organization. So the question arises, from where do companies buy these credits? Under the cap and trade program, the government allows a certain number of credits every year and beyond which companies cannot pollute. In the free market economy, things do not work as intended, and a lot of big organizations are blamed for hoarding these carbon credits, which has caused an asymmetry in the supply. So where does EKI Energy come in? Initially in 2011, the company started as an advisory for climate change and as a consultancy for registration and verification of carbon credits. But today it has broadened its scope. EKI Energy Services, or EKI International, is an Indore-based company that provides end-to-end solutions in training, consulting, energy conservation, clean development mechanism, carbon footprint measurement, and many more in the sustainable space. It has a global presence serving Australia, the United States of America, Germany, and other countries in Europe. The company earns a majority of its revenue, that is 95%, from carbon credits. Now let's take a look at the reasons behind the rise. Let us try to decode the financials for a better understanding. The company has shown a continuous increase in revenue and profits. As mentioned earlier, the company provides consulting and advisory services, but the major revenue comes from the trading of carbon credits, where a company buys the carbon credit at a low or fixed price and then later sells it in the voluntary market at a higher price depending upon the agreement made with the client. The prices of the credit has been on an uptrend from April 2021 to February 2022, which can be correlated to the revenue as they are proportional to each other. A few other reasons behind the rise might be the Paris Agreement, which set the stage for the voluntary carbon market. The United States showed commitment towards the Paris Agreement and accepted to achieve the carbon emissions target. This triggered the large corporations and led to the explosive demand of carbon credits. Due to the lack of competitors in facilitating carbon credits trading and consulting, EKI was able to emerge from providing the comprehensive end-to-end solution to the dealer in the carbon market. So in closing, this was the complete case study of the evolution of EKI Energy and the reason for its humongous rise in price. Will this continue? Well, looking at the growth prospect and the emergence of the voluntary carbon market around the world, this sector may really hold a key to the future. Let us know what you think in the comments. Happy investing!